All right, we're live. So welcome back to Dapp University. So today I'm talking about something that would be terrible for the cryptocurrency markets and blockchain technology on the whole, in my opinion, that I keep seeing pop up in the news over and over again. All right, so I'm going to talk about that in this video today, what it is, why you should know about it, because again, I see this coming up more and more frequently, and it's important to talk about in these videos. We do these live streams Monday through Friday here on this channel about 9:30 a.m. Central Time, so you can turn on notifications down below or just show back up here at the time that we do these to catch them when we're live. All right, so before we get into that, if you're new around here, I'm Gregory, and on this channel I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you learn how to become a blockchain master step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right. So I really hate these disclaimers. Last night, at least, not financial advice. Nothing I'm saying in this video is financial advice. I'm not telling you to buy or sell any cryptocurrency based on this information. So let's jump in and get started. We got people jumping in the chat here. So we got Culture Highs, Game Elevator, Jessica, Kevin, Crypto, Rocketeer, Sonic Blast, Daily Dose of Opa, Crypto, Beer, and Jesus, Wesley Carter. Awesome. Welcome, welcome, welcome. So let's jump into this, all right? I want to talk about a news story that came up and what we can learn from it, because I see these types of news stories come up all the time, and they're happening more frequently, actually. And if you watch these live streams, I talked about this, when we start to see frequency increase, that usually means that we're speeding up into a certain direction. I mean, we've seen so many insanely bullish things come out for crypto over the past 6 months to a year. So one of the only reasons I'm able to do these live streams is because like new exciting stuff happens all the time. That was not true 6 months ago. That was not, well, it was true 6 months ago. It wasn't true 2 years ago, right? It was starting to become true a year ago, right? So anyways, the whole point is, here's something else that I'm starting to see pop up more and more and more again, okay? So Bank of England begins hiring for central bank digital currency team. All right. So I gotta pop up here. Let me kill that. So as Bank of England, the central bank, United Kingdom, advertising job openings for a team dedicated to the exploration of central bank digital currencies. All right. So anyways, I'm not going to read the whole article on it, but the whole idea is Bank of England getting more serious about a central bank digital currency. So we're seeing that with more news of other people trying to talk about central bank digital currencies. So what are they? Well, basically, it's just, it's kind of like what it sounds. So central banks are basically the big banks for countries, especially Western countries, that control the money supply, essentially. So why do I personally think this is a bad thing? People might disagree with this, but I think a lot of people in crypto think it's a bad thing because it's really the opposite ethos of what crypto is. It's kind of anti-crypto. So I'll explain why. So first of all, like, why was Bitcoin created in the first place? All right, let's just talk about the first cryptocurrency. What was the spirit of Bitcoin? Well, let's talk about when it was created. Okay, so Bitcoin was created, after the big financial crisis, 2008. Especially whenever we started doing quantitative easing, basically printing money and increasing the money supply. People talk about the banks that were too big to fail, all that kind of stuff, right? So Bitcoin was kind of created in that ethos to be a different thing where you could have a scarce money that was digitally scarce, couldn't just be inflated away. There's lots of other benefits to it, but that was one of the main ethoses in the first place. Okay, and the central bank digital currency is kind of the opposite of that, right? We're talking about something that we want to have a money. It's a decentralized money that's borderless, that transcends nation states, that is not just put in the central. It's not really centralized in this way like a central bank digital currency is. I mean, that's the whole idea: central bank, centralized versus decentralized, which is like what Bitcoin, Ether, and all these other blockchains are trying to do. So in that way, it's really the anti-crypto, all right? And why I think it's a bad thing? Well, it's also kind of like it's very potentially like a wolf in sheep's clothing type situation. And I think a lot of discerning people won't even see the sheep's clothing. But the whole idea here, and this is also a potential threat for all blockchain technology, in my opinion, is basically just makes it easier for you to track, okay? And then, find out everything that you do and have more kind of control over the minute details of your life. So, I mean, in my opinion, that's not a great thing. So Let's talk about how it is now. I mean, the system we have now, essentially, you have a bank where your transactions in the bank are, supposed to be private. Same thing with your credit cards are supposed to be private unless someone's buying your data on the back end. But with central bank digital currency, essentially you just have like a Fed ledger, and then the Fed ledger would just be able to track everything that you do. Like and it could be bad because, who knows, maybe your credit card will be forced to comply with central bank digital currencies, and maybe your transactions would have to be recorded that way. I don't know. This is a speculation on my part, but I can see many ways how that could send us down a road that I don't think many people watching this channel want to go down and don't want the world to go down, because it's really it's the anti-ethos of crypto in general. So, I mean, because right now you at least have the freedom of cash, right? If you have freedom of cash, you can go spend money however you want to, and it'd be way less likely that you'd be tracked on your cash transactions compared to, something that's recorded on a ledger. Now there are people who watch this and say, hey, well, if you're not doing anything nefarious or bad, like, it shouldn't matter. That's not the whole point. The whole point is having something that, one, can't be affected, like you have some sort of reserve store of value that transcends nation states, so that, number one, the central banks can't inflate it away. Number two is the tracking issue. So, I mean, people can deal honestly, not do illegal bad things, but still just want privacy. That's okay. And that's where I fall on this side of things. I mean, this to me is an anti-crypto, and it's also bad because it kind of skews what the vision of crypto is in the first place. So, for people who are less discerning, it could really lead them down the wrong path and get the wrong idea. So I'm not a huge fan of this. We also see, it's talking about Bank of England in this. The reason I bring this up when I talk about it is because I said I've seen the frequency of this type of thing come up. When we saw this announcement today, and then yesterday, talk about Mastercard highlights applications beyond payments for central bank digital currencies. Right. So more about CBCDs. Like I said, you got to watch out for this stuff. I think I think they realize what the benefit here is that can be gained from this. So the other thing is, I've also feared that this is something that could basically just be a side effect of blockchain usage in the first place if we don't solve our privacy issues, which is basically, I mean, it's a pretty common misconception that you can't be tracked on something like Bitcoin. Well, that's not true at all. It's actually pretty easy to track people on Bitcoin, especially with the advanced chain analysis tools we have today. So you have to understand that all the activity on a blockchain like Bitcoin right now is public. It's public ledger, and if you're sophisticated, you can analyze it, right? We even have compliance tools that are built for this type of thing to analyze where cryptocurrency goes and who is likely sending and receiving and spending it, okay? So basically, like, if as long as the exchange knows who you were, you KYC'd and then you left, if that exchange is forced to hand over their KYC compliance information to you to find out the withdrawal address, they can totally find out who you are and what you're doing. So that's, to me, is a potential downside threat to crypto over the long term, is that it basically just makes things easier to track if we don't solve privacy over the long term. So something to think about, something to be aware of. Pay your taxes, because trust me, they can find you. Okay, so let's look at the prices. Anyways, that's my whole spiel on central bank digital currencies. That's what you need to know about them. Again, I bring it up because I'm not trying to be some crazy conspiracy theorist, but it's something that you need to understand, because we're seeing this pop up more and more and more and more and more. And I think it really is kind of anti-crypto. It's kind of piggybacking off this trend of crypto being hot and trendy, but I don't think it's good. So let's look at the prices. So Bitcoin, actually, let's look at Ether first. That's what I'm more excited about. So Ether is doing its thing. Let's see, what's our all-time high? So our all-time high is 2,700. Gosh, we got so close to 2,800. I bet it printed 2,800 on an exchange somewhere. I wasn't watching it. I don't really watch the price that much, to say the truth. I usually just check it, like, usually I get on Twitter and somebody tells me what their price is. So yeah, we're getting pretty close to all-time high. Looks like we're trying to push past that. I'm feeling bullish. I don't have any short-term price predictions. Things look good. Let's go back and look at Bitcoin as well. Nice. Kind of seeing a good candle there on Bitcoin as well. So over 7 days, starting to look a little more little more bullish than it has been. All right, kind of like we've seen some stuff that looks sort of like sideways, low key bearish. Now we're kind of seeing sideways, low key bullish. All right. So let's go ahead and check our on-chain metrics as well. I'm going to pull these up here. I kind of like to see what the health of the overall market looks like based on this stuff. So that's, like I said, you know, on-chain analysis is able to do a lot of stuff. You know, we can analyze the blockchain for many purposes. We can look for the big picture stuff, like what's the overall currency supply doing, like what I'm about to show you right now for Bitcoin. We can determine like what percentage of the network is in supply. That's one big, it's sort of the macro use case. One is compliance, which I talked about a minute ago, which is basically tracking people and their activity. As long as you know, as long as you have a registration point of the first person when they bought that cryptocurrency, there's pretty advanced tools where you can go track, see pretty much everything they did and kind of try to get clues about who they are and what they're doing. The last major use case is like more micro analysis, like analyzing DEX trading and yield farming and stuff like that. So, all right, I'm looking at my chain analysis tools here. It looks like it's my dashboard's a little off. Oh, sorry, I have to log in. So we got questions in the chat here while I'm logging in. Somebody says ETH 10K. Yeah, I hope ETH 10K. I think we'll see it. I think, you know, like I said, not financial advice. I do think we'll see a 10K ETH. I just don't know. I don't know exactly when. All right, so let's check it out here. So our net unrealized profit loss, our current metric as of yesterday, because again, these are like 1 day behind here. Sorry, this gets kind of crazy. We're currently sitting at 0. Gosh, this gets kind of messed up. 0.63. So we dropped in Newport terms. So again, this is super bullish when this kind of stuff happens because it gives us more headroom to rise. It means potentially our bull run is extended. Because we're at a very similar price point to where we were at a different Newport metric, and we have more headroom here. Because again, this measures the percentage of supply that's in profit versus in loss in terms of net, like unrealized, right? So last time we were at 0.63 was a long time ago. It was like here. I can't quite catch it on the graph, but last time we were at 0.63 was basically like about $30,000, and now we're almost twice that much money. All right, and we're at the same Newport value, so that's actually really good. I'm not 100% sure how the metric works. If that means we can double from here, it probably depends on the speed at which we double before we can hit this euphoric territory. But I would think that with it, I would think that it's linear in the sense that if we basically doubled in this same amount of time, that it would produce the same Newport metric. Don't quote me on that, but that's kind of my assumption here, and that would mean that we could go to like, you know, up over 100K. If we basically that would say, if my assumption is right there, that would mean that we could go to 100K in like, you know, a 1 month's time and not hit euphoria, depending on how fast we got there. Average velocity. I think that's how it works. Okay, so. Yeah, stuff's looking good. So let's look at something else that I saw here. So I put this up on my Twitter. I put this tweet out. I just saw it this morning when I was kind of browsing the news. So let me pull it up on my screen here. Talking about Ethereum gas prices, okay? So I saw this come up, saw this tweet on Twitter. So it's saying Ethereum has finally become affordable again with everyone using Polygon, BSC, and Solana. So this is a pretty big misconception, and I retweeted this. So I'm not hating on Lark here by any stretch of the imagination. In fact, hey Lark, if you're watching this, anybody knows him, wants to do a video, invitation is totally open. So I'm not calling anybody out. I'm mostly just like talking about this as a misconception and why it's important to bring up, because it's not really what the data shows. So and the reason I want to hammer this home is because, you know, the narrative is out there that basically all these things are just ETH killers. Like they're just going to take away the market share of ETH. ETH gas prices are too high. We talk about over and over and over again on this channel. And Lark's got a ton of positive things to say about ETH. Like, so I'm not, like I said, I'm not calling him out specifically. I'm talking about this as a misconception because it's not what the data shows. So the assumption here is that Ethereum's gas fees have gone down because everybody's stopped using Ethereum, right? They've gone to use Binance Smart Chain. They've gone to use, Polygon and Solana, right? And for that reason, like Ethereum's gas fees have cooled off. Well, that's not really true because if you look at the daily Ethereum transactions, they're at an all-time high. So that means something else is affecting the gas prices. So if you go here, you can see our daily transaction. We're just below the all-time high. We hit it a few days ago. But yeah, if you zoom out on the larger time frame, people haven't stopped using the Ethereum network, right? Like it's only gone up in this time. That basically this is when everyone started kind of coming onto the scene and saying, oh my gosh, Ethereum is too slow, it's too expensive, nobody's going to use it. And then the user base grew like crazy from there. Okay, so it's like it's not really true. So anyways, so what's the factor? Like what are the big factors? Well, there's multiple factors. If people aren't leaving the blockchain to go use other chains, what are the factors that are actually causing the drop in gas prices? Because if you look at it now, the ETH gas prices, let me pull it up. ETH gas prices are like really low. Like 50 Gwei is fast, 47 is standard. Okay, I mean these have been as high as like 500, like over DeFi summer and all that kind of stuff. I think we had to go like change how some of the clients worked at some point to support a higher gas limit to make this work. So why did the gas prices drop? Well, there's lots of factors. One of the biggest factors, in my opinion, is Ethereum gas limit hits 15 million. Okay, so it was actually raised by the miners. So the miners are able to do this. Miners can raise the gas limit. They have to basically vote to do it. But basically, raising the gas limit changes how much information can go into each block. And that's essentially what Binance Smart Chain has done to get faster. It's one of the things they're doing to get faster. They just raise the block limit way more than Ethereum wants to, and that's what makes the transactions cheap and fast. But of course, we're seeing the state of the size of Binance Smart Chain grow like crazy to where it's starting to become unwieldy and unsustainable. So yeah, we basically raised it from like 12,500,000 to 15 million. Okay, so it's a small increase, but it does help. And we've also seen Flashbots come onto the scene to take away some of the front running that's been happening, and some other things too. So it's sort of this aggregation of these different gains that kind of add up to this right here. But it doesn't seem like people leaving Ethereum and using other blockchains is having a tangible effect on that based on this data here. So, I mean, of course, you don't see a breakdown of these transactions. You could break this down by maybe smart contract transactions, like people using dApps. I mean, some of this might just be people buying Ether on exchanges and withdrawing their wallets. It's true. You'd have to see a better breakdown of that. But if you look at it from high level, it doesn't look like, I still think if people were just leaving the scene and not using dApps, you'd see this drop off. So I only the reason I bring it up is for education purposes, to basically show like that's not really the right take. So anyways, another pretty cool thing that I saw come out was Coinbase allowing people to pay with PayPal. So we talk about big PayPal integration for cryptocurrencies, where basically PayPal allowed people to buy cryptocurrencies on their platform and sell them, right? And also allow their merchants to accept crypto as well. Well, now we have people having PayPal as an on-ramp to Coinbase. So if you have a Coinbase account, if you're a US user, to buy crypto with that PayPal account. This is also great because when I talk about the more you can do with cryptocurrency, the more valuable it becomes. Or the more ways to get cryptocurrency by the same logic, the more valuable it becomes. The more ways you can enter into the cryptocurrency space, the more valuable it is. The more you can do with it. You can pay a merchant, you can do all this kind of stuff. Even if it's not just price appreciation, the more valuable it becomes. That enhances its network effect, like we talk about a lot in this channel. And the greater the network effect, many times that value accrues to the price of the actual cryptocurrency itself, because the more people use it, hodl it, all that kind of stuff. So this is big. So I also read through this article. I mentioned on my live stream a couple weeks ago, and I'm actually going to release a video on it. So make sure you subscribe to the channel. Let's check it out when it comes out, probably on Monday. But this is actually a really good article. Okay. So like I said, I brought it up before, but it's Arthur Hayes' analysis of what's happening with DeFi and what's happening with Ethereum and how Ethereum could be insanely huge. Okay, so if you know Arthur Hayes, so he's a former CEO of BitMEX. He's an interesting character for sure. Had a little trouble with the authorities, but he's no doubt incredibly smart, very forward thinking, really knows what's going on in the crypto space and also in finance. Has a pretty big background there. So it's a pretty good article, and honestly, it's pretty fun to read because he's got a really good writing style, and he goes through this. But he talks about basically what's wrong with the banking system, and how DeFi in general is really well positioned to cut into this big time. Okay. And he talks about also what are the benefits we use DeFi for. A lot of stuff we talk about in this channel: savings and lending, trust services, checking accounts, all that kind of stuff. He talks about basically, he quantifies how big this pie is that DeFi can cut into, especially on Ethereum. He's super bullish on Ethereum specifically. He does mention other things in this article, but he talks about how Ethereum is uniquely positioned to disrupt all this stuff. And he kind of does some napkin numbers on hey, if we extrapolate this data, the price to revenue model over the last 4 years, we look at the mean, we look at the median. If we look at mean reversion, the price would be about $9,000 per ether if that mean reverts. And then also if he takes the median figure and then tries to talk about the systems that Ethereum stands to disrupt, like the auditing firms and also the banks, okay? And you start to look at their percentage of their market share combined, and you do that based on the median price to revenue. Then if Ethereum just captures 1% of all that, it could be worth $40,000. Okay. So again, these are some napkin numbers basically. He even says in here these figures are quite extraordinary, very high, and it's kind of rough, but it'll get you thinking bigger about what's possible with ETH and how very early we are if this is the actual trajectory that we're on. So it's a great read. I highly recommend it. Check out that video I'm going to post when it comes out. I'll kind of go through it point by point. And yeah, it's awesome. So let's see if we got any questions in the chat here. So link to article. I'll if I remember after this live stream, I'll put it down there. Well, I guess I can put it in the chat right here. So check on Polygon. Yeah, we can check on Polygon. So I talked about Polygon yesterday. Let's see what's going on with Polygon price. So it looks like we're about to where we were when we did the stream yesterday, maybe a little bit higher. We kind of bounced a little bit. Yeah, but 7 days still bullish chart. That still mirrors the Polygon adoption that I was talking about earlier. And I think this is a pretty big sign of things to come for L2 scaling solutions whenever they roll out in full force on Ethereum. Somebody says, can you explain what websites like PancakeSwap are for? I'm noob and a little confused. So PancakeSwap is a decentralized exchange. It's a DEX for short. So basically this lets you go trade tokens. You just point and click. You say, I have this token or cryptocurrency and I want to trade it for this cryptocurrency. It's a much simpler interface than a complex exchange where you have where you basically have sophisticated interface where professional traders use it, like order books and candlestick charts, or just sophisticated investors. It simplifies all that. It's powered by smart contracts. It's blockchain based, so you have to have a cryptocurrency wallet to use it with cryptocurrency in it. You don't register for an account or anything like that. That's why it's called a DEX, a decentralized cryptocurrency exchange. So you control your money until you trade. So you just go to it. You tell the cryptocurrency you have. You tell it what cryptocurrency you want. Instead, you click swap. You sign the transaction with your blockchain wallet. And on the back end, the smart contracts actually facilitate that trade. So it's a fork of Uniswap, which is the Dapp that basically made this model really popular on top of Ethereum and is the front runner for all this stuff. How do we get into ETH 2.0? Well, for now, you have to basically go to the deposit contract and stake your cryptocurrency that way. So unless you really, really, really want to do that, I don't recommend that most people do it, to tell you the truth. It's pretty complex. And you have to have a lot of money to do it. Let's see what 32 Ether is right now. Be about $70,000, wouldn't it? Let's just see here. Let me just pull up my screen here. Oops. 32 times, what is the current Ether price? Like 2,800 about? Oh, so it's $90,000. Yeah, it's about $90,000 to stake. So we're getting pretty close to the six-figure territory just to run an Ethereum 2.0 validator. Somebody says, why do people keep saying DOT, Sol, and ADA are ETH killers when they are centralized and years behind what ETH is trying to accomplish? That's a great question. Let's see here. Someone says don't use PayPal because you don't own it. Is that true? No wallet. So this is basically the same for like any centralized custodial service. So that's what it really means, a custodial service. They are the custodians of your crypto. So the old adage in crypto is not your keys, not your crypto. So different people will implement this under the hood. So in one sense, like you don't really know unless they disclose whether you have access to those keys or not. Which most times you're just not. Most of the time they're just going to hold it in like a treasury. And then you just have an IOU to that crypto on the platform, and it's all like your trades are just going to get settled in a database. And then when you withdraw, that's when you actually get it. So I'm not totally sure how all the architecture works on every single exchange or how it exactly works on PayPal. But I think that the thing that people are trying to highlight here is that, when you basically like whenever you hold it on PayPal, that it's not in your wallet, right? So someone, they have control over it. If they want to put limits on what you can do with it, well, then they're going to put limits on what you can do with it. If they may say you can only withdraw a small amount per day or something, and then you're like, well, I want my money, but I can't take it out, and they're like, well, sorry, it's our rules. You know what I mean? That's what makes decentralized technology so popular. Especially about money, people can't tell you what you can't do with your money. Now, of course, there's trade-offs, right? You have to be the custodian, and you have to take care of it and make sure you don't lose the private keys, or get compromised, or put in a smart contract that's going to get hacked or something like that. But that's the trade-off. Somebody says, I wonder why you only make videos on Ethereum. Yeah, it's a good question. So I've worked with Ethereum primarily as a developer since 2017. It's what I do pretty much every single day. It's my largest holding in my crypto portfolio. So that's where I'm coming from. So both those things are linked. It's a bit in the technology and also the investment itself. They come from the same place of high degree of confidence in where the Ethereum network is going and what it's capable of compared to every other alternative out there. So that's where I'm coming from. People like try to say, oh, you're so biased, all this kind of stuff. Why don't you talk about this, that, the other? I've made big bets on this particular area of the tech. I'm a specialist. I can't specialize in everything. I specialize in this for a reason. And so, I still think that Ethereum is the strongest lead in this race to becoming a global settlement layer for finance, world computer, all that kind of stuff. I'm also super open-minded and quick to change my mind in light of new convincing information. So if that ever changes, then I can definitely change what I do and learn something else a lot faster than like most people could. So that's where I'm coming from. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how could you get started today? Well, you can go to my YouTube homepage. You can find any of my free courses there. They're like Udemy courses, but they're totally free. If you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step by step, start to finish, over at dappuniversity.com/bootcamp. All right, you just be an expert to get started today. Help people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.